That will be another interesting cue. And that's why you saw metals actually rally quite a bit on Friday. Joining us on the show now to discuss the week gone by on the last street and prepare you for next week, we have Aaditya Narain, Head of Research, Institutional Equities at Edelweiss. Aaditya, thanks a lot for joining us. Your thoughts on how the market has negotiated the warning from the Fed after initial hiccup, and whether this market is set to make higher highs and much higher highs?
Hi guys. In terms of how the market has negotiated, the Fed reverberations, as it were, the previous week, I think it's done it actually pretty well. I think you had a little bit of a shock. You have had the reality of domestic inflation looking relatively high. So I think it has weathered that pretty well. I think what has been fundamentally more encouraging for the market at some level has been really some of the IT data, IT numbers that came out during the course of this week. I think that just tends to support the broader hypothesis that we have, which is that the global economy has a lot of momentum, the IT services space has a lot of momentum, and that should support earnings as far as India is concerned. I think at a broader level, in terms of how much higher the market could go, I'd be a little watchful in terms of how much momentum you could put at the back of recent performance. And I say that in large measure because while there is confidence in the street and even corporates seem to be fairly careful, I do think the second wave has probably had more of a dislocationary impact on demand than is being factored in at this point in time. And so to that extent, I think the next couple of months, you might see some softening in data, or the unlocked trade not playing through as aggressively as a lot of people are expecting it to, which could put a little bit of a cap on the market. So could it go a little bit higher? Yes. Could it run away with much higher highs? Always a possibility. But you need good consumption data to start supporting that, rather than it being something that's driven purely by markets globally or by corporate commentary or corporate expectations. I think you have to start seeing slightly higher frequency data, which shows that the dislocation has not been as much as what we believed when we were at the peak of the second wave.
Aditya, morning. This is Rima here. We'll get chatting on more questions, but before that, let's apprise our viewers of the big newsmaker of the week, and that is Reliance Industries AGM. Mukesh Ambani, the chairman and the MD, made some very important announcements at the 44th AGM. Sonal is here to give us a key lowdown of the key announcements. Sonal.
Well, absolutely. Big bang announcements in Reliance's AGM, and the biggest focus was on green energy, and that is where the company has committed big capex over next 2 to 3 years. So the company will be investing $10 billion in new energy business over next 3 years. That is 75,000 crore rupees. 60,000 crore rupees of which will be used to set up 4 gigafactories, and 15,000 crores will be used for providing supporting infrastructure for these factories. The company wants the Jamnagar facility to be the new cradle for the new energy that they are getting into, and they also want to build capability for green hydrogen to decarbonize a lot of sectors. So the 4 gigafactories that they plan to construct will be the photovoltaic gigafactory that will basically cater to solar energy, advanced energy storage factory, second will be electrolyzer gigafactory, and then we also have fuel cell gigafactory which could be used in the automobile sector. Additionally, the company also announced that Saudi Aramco's chairman will be joining Reliance's board as an independent director, and there could be some progress as far as the Saudi Aramco deal is concerned by the end of this financial year. That was about the energy business. There were some updates in the telecom business as well, but the company has now launched a Google partner smartphone that is on expected lines, and this will be available by 10th of September. The pricing of the phone that is not known yet. However, the street is expecting a competitive pricing as far as this new launch is concerned. Goldman Sachs says that the announcement as far as the telecom sector is concerned in the AGM have limited earnings implications for listed telecom companies as well. And lastly, for the retail segment, the company said that Reliance Retail could be growing by at least 3 times in the next 3 to 5 years. They also aim to be among the top 10 retailers globally. Apart from that, they also added that they will add 10 lakh jobs in Reliance Retail over the next 10 years.
India is experiencing an explosion of aspirations. India's GDP per capita is around $2,000, while the world average is around $12,000. India's power consumption per capita is at present only 1/3 of the global power consumption. This wealth disparity and energy disparity is unacceptable. The only answer to these problems lies in sustainable and equitable development in India and globally.
That is about Reliance Industries. The stock was down 2.3% on Friday in reaction to the AGM, down 5.5% last week. Aditya, what did you make of the market reaction to the AGM, the announcements? What is bothering the street? And do you think RIL will be an underperformer going forward?
I think there are two elements to this, right? One is the direction in which the investments are headed, and I think that's really the appropriate way to go. I think, and we've been having conferences on the ESG side, and the predominance that gets in terms of investors' minds, in terms of corporates' minds, and I think more importantly, in terms of the need of the economy as it expands, I think that is significant. So I think the direction of the investment is actually absolutely right. And it is a massive opportunity, and I think it will play out over a period of time. I think the market's concern is simple, that there is going to be a lot of capex involved. The balance sheet will end up getting potentially a little leveraged, and the payoff can be at a later date. So you've seen this with the telecom investment cycle, that the early days, it actually was a drag in terms of the stock for a fairly extended period. And the market is thinking similarly this time around. So I don't think there's any real surprise in terms of the market's reaction to the fact that leverage is going to go up, and this is a long tail kind of investment cycle. But is it in the right direction? I do believe it is. You've already seen China make that move over the last year or two as they try to clean up their entire energy space. And I think it's something that the world has to head to. You're seeing that in the US. And it's Reliance taking the lead here. There, it's more governments. Here, it potentially will lie on a private balance sheet, so the markets might look at it more closely. But I think this is a direction that needs to be taken.
Okay, this is a direction that needs to be taken. Yes, absolutely take your point. The market's memory, is there in terms of when you take leverage, the stock suffers. But let's do one thing. Let's now take it to Agam, who will tell us about the companies that came out with numbers in this week. Agam?
Well, we had more hits than misses in earnings this week, and I start off with ONGC, a strong set of numbers coming in with 25% growth in revenue, 21% growth in its EBITDA, with profits coming in at around 6,734 crores, well ahead of street expectations. It was a similar set for Ashok Leyland as well, much better than what the street was working with an 82% up move in revenues, and its operating margins coming in at around 7.6% against 4.7%. It also posted a profit against a loss year on year, largely driven by a low base. Moving on to NMDC, again a strong set of numbers coming in, about 115% growth in revenues, with profits moving up 717%, with average realizations also improving by as much as 67% on a year-on-year basis. Bharat Electronics from the defense space, once again posting a good set of numbers with 19% growth in revenues and a near 300 basis points improvement in its operating margins, largely led by improvement in execution. However, not the best set of numbers coming in for Apollo Hospitals. Revenues did decline 2%, and margins did expand by as much as 130 basis points to 14.3%, but profit declined by around 19% year on year. So a mixed set of numbers there, but on the whole, it's been a good week when it comes to earnings.
Aditya, the big earnings surprise was from Ashok Leyland. I mean, your thoughts on this stock, in fact, the entire auto pack. How do you approach it from here?
Yeah, so for us, it wasn't such a surprise. We were anticipating actually fairly strong numbers, but I think relative to the street, I think it has done fairly well. I think we are unambiguous in our call that we are very bullish in terms of the CV cycle. We are decidedly less so in terms of the two-wheeler cycle and the four-wheeler cycle, right? And that's how we are playing it. So within our portfolio, we're actually running an underweight on the auto space. But within the auto space, we have an overweight on the CV cycle and on the tractor cycle. That's how we are playing it. So you know, you can always.
Aaditya, what about Apollo Hospital? No, go ahead. Complete your point on Ashok Leyland.
Yeah, so again, you know, it is a little bit of a two-tiered kind of call as far as the sector is concerned, but we see distinctly different drivers there. One is a very front-end consumption driven issue, which is what the two-wheelers and the four-wheelers are facing. The other is the more industrial cycle, where there is a little bit of a capacity crunch, and that's why we are seeing a much steeper climb up there. So I think that's how we are actually looking at it in the context of the auto sector, and particularly in the context of the CV cycle.
Absolutely. So you're seeing it as a proxy for the cyclical recovery which is taking place. What about Apollo Hospitals? The markets rewarded Apollo Hospitals' numbers as well as all their digital initiatives surrounding their network. Where do you stand on healthcare in particular?
Yeah, so we'd be positively biased on healthcare. We'd be neutral on pharmaceuticals. If you really look at what has happened with Apollo Hospitals, you know, it's actually the stocks had a lot of buzz in the last 6 to 12 months because of COVID. Initially, it went down, and then there's been a positive reaction to it. But actually, if you go back about 2.5 to 3 years ago, I think that's where you saw the real turn in terms of this business, because that's where they actually put up a lot of capacity. There was a lot of capital intensity on that balance sheet. And once that rolled over, I think it's typically tended to be a one-way street for this stock. So what's actually particularly happened in this case is that it was on an upswing in any case in terms of its pure return on capital and the pure leverage on the investments that was taking place. And then you've had this further push in the context of COVID, where healthcare services are getting more demand and in many ways are being valued up more aggressively. So at some level in the healthcare space, we like it, but we like Apollo even more than the others simply because of the direction it's taking. Plus, of course, there's some possibility of one of its subsidiaries coming to market. So I think that's adding to the vibrancy of the stock. But it's really a capex cycle that has started being leveraged over the last 2 to 3 years, which is giving you this tailwind in what is obviously a fairly good operating market for anyone in the broader health space.
Aaditya, it's a pleasure speaking with you and getting in your thoughts on the markets as well as individual stocks. Thanks so much for joining in. It's time for a short break, but on the other side, we'll get chatting with Rohit Srivastava of IndiaCharts.com. He'll come in and talk about the market technicals. And as we slip into a break, we leave you with some market opinion that we got earlier through this week.
At this juncture, we probably have a view that